Good morning, everyone. This is Hadjikyriacos, analyst at IronFX, bringing you the morning comment for the 10th of November. What election? Back to square one. The only game in town was countermoves yesterday, as market participants rapidly digested that Donald Trump will be the new president of the United States. All of the asset classes that reacted to the election process began moving in the opposite direction after the result was made official, possibly as market participants took profit on their bets. However, the moves did not stop at profit taking. Many major FX pairs fully reversed their initial knee-jerk reaction, and some even traded further in the opposite direction. Stocks kept surging throughout the European day to recover all of their prior losses, while safe haven assets such as gold plunged, giving back all of their Trump gains. The most notable currencies that did not fully recover their losses were the Canadian dollar, the Mexican peso, the Australian dollar, and the New Zealand dollar. In our view, this is a consequence of investors' heightened anxiety over President Trump's trade policies, which sparked fears that we may be headed for a period of trade protectionism across the globe. We believe that the four aforementioned currencies are likely to continue to feel the heat of the election outcome, given the risk of increased US protectionism and the possibility that this could even spark a global trade war. Overnight, RBNZ cuts rates, but the Kiwi trades in rollercoaster mode. The RBNZ reduced its key policy rate to 1.75 from 2% previously, as was widely expected. Surprisingly though, the New Zealand dollar surged on this decision as the bank signaled that this may be its last rate cut for a while. That didn't last long though. In the press conference following the decision, Governor Wheeler said that he has an open mind on intervening in the FX market in order to curb the Kiwis' gains, as a strong currency could make the bank's task of returning inflation to target much harder. This triggered a sell-off in the New Zealand dollar. The New Zealand dollar versus the US dollar pair erased the gains it posted after the policy decision to trade even lower in the aftermath. We believe that the pair could continue to correct lower in the near term due to this intervention warning, as well as the risk of heightened trade protectionism across the globe. On a longer term time frame though, we remain fundamentally bullish on NZD. After all, NZD USD has been on an uptrend since the beginning of the year. We will reconsider this view if we see signs that the RBNZ is indeed likely to start intervening in the FX market and that Wheeler's remarks are more than threats aimed at jawboning the currency lower. As for today's highlights, during the European day, the most significant indicator that we get is Norway's CPI for October. The forecast is for the CPI rate to have ticked down, but to still remain considerably above the Norges Bank target. We believe that this will be an encouraging news for the bank, as it may confirm that the temporary effects from the previous depreciation of NOK have slowly started to filter out of consumer prices. This could support NOK on the news, as it could diminish further the chances that the Norges Bank takes any further action in the foreseeable future. For more information, including technical analysis, please read the full comment on ironfx.com or download our app and get all the information you need to trade. Also, you can follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Hadjikyriacos, analyst at IronFX, wishing you solid trading.